Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today we're going to take a deeper dive on an excellent article by my great friend Tom Finnegan. And Tom has written for STRATMOR an article called All Hands on Deck, Action Items for Banks in Navigating a Tough Mortgage Market. So I'm thrilled to have Tom. Tom has been a long career within our financial services. He's currently, as mentioned, a principal at STRATMOR. He was president of First Merit and also president of Huntington Bank. So hi, Tom.
Thanks. Thanks for having me today.
Well, I'm super thrilled because I loved your article and I want to do everything to really have you discuss all parts of it because I think it was so appropriate for sure. So let's talk about the first part of what you said in your article, which I think is really important. That you said that the first issue for banks is to focus, and talk about that.
Well, absolutely. I mean, I think banks oftentimes tend to think about all their offerings in the same way as products. And, with respect to mortgage in particular, because the environment, the competitive environment includes certainly other banks, but also local independently owned mortgage companies and large national mortgage companies, it's much easier for banks to be outcompeted, if you will, in the
Hmm.
mortgage space by those entities than perhaps in other more natural bank products. So in order to take on that competition and leverage the strengths that banks have that independent mortgage companies don't, it really requires a comprehensive focus inside the bank on marketing of mortgages and grabbing that customer base for mortgage opportunities.
Well, I think you make a really good point. It was shocking to see the graph, and I did love the chart that you showed where they have that we're talking banks have lost market share over so many years. And if that doesn't get your attention, I don't know what will. So talk about that, what you have seen when you're talking about losing market share.
Absolutely. Again, the banks, of course, are not all the same. There are the large banks, some of which have intentionally reduced their presence in the mortgage market, such as Wells Fargo. More often than not, banks have retrenched into their bank footprint area and abandoned the idea of being national players to a large degree. So that's part of the reason why bank market share has declined. But also, again, it's because the competitors, the independent mortgage companies and the large national mortgage companies, have made such a play in the business, particularly during the refinance periods of 2020 and 2021. That kind of intense competitiveness on the part of those national players has tended to leave banks a little bit behind. And now that we're in a purchase money environment, that may the opportunity for banks may have swung around a bit in the sense that some of those national refinance oriented players are not as adept at generating purchase money business, and some are actually changing their business plans to better accommodate a purchase money environment like we're in right now. But it's a result of those reasons and the risks. Actually, banks many banks have also taken a look at whether the risk and return characteristics of mortgage are where they want it to be. And banks have been oftentimes looked at as a deep pocket for actions by federal agencies, the FHA, and so on. And so there's been a reticence on the part of some banks to participate because of the perceived compliance and other risks associated with the business.
You also have a fascinating chart that talks about that they've even failed to penetrate their own customer base. And I think that the chart's not surprising, but is actually quite sensational from what it really is showing. And why don't you talk about that a little bit?
Certainly. I mean, Pat, you're in the business of focusing on loan officers with an external focus, and
Sure.
that's important. That's important for banks, especially in today's market. However, the thing that banks have available to them that independents don't is the access to that large mortgage customer base and non-mortgage bank customer base that's sitting right in front of them. Most independent mortgage bankers would die for that opportunity
Hmm.
to try to solicit mortgage business from that large base of customers. And that the fact that banks don't achieve the kind of penetration level that you might expect that they would with their own customers. Again, I think that does go back to the issue of focus. Many bank customers don't actually even know or think about their bank where they hold their checking account as the first place to look when thinking about a mortgage. And the unaided response, on banks being involved in the mortgage business isn't high. So that puts the onus on banks to get in front of their customers with the message that they are in the business, and also to do the kind of analytical work on their customer base that will allow them not just to do media type and image brand advertising, but to make specific focused offerings to their customer base who are in the market or have the potential need for a mortgage at a moment in time. A more direct marketing approach for mortgage is almost certainly needed. And oftentimes, because there's not good communication perhaps between the mortgage unit of banks and institutional marketing, that kind of direct marketing exposure to the customer base is missing from the overall bank approach to marketing. So I think it's for those reasons that banks have not been able to penetrate that customer basis effectively. Also, in the refinance periods, half or so of all refinance business was done by consumer direct type lenders. Now, for large banks, many of them actually had consumer direct shops and were big in terms of trying to refinance their own portfolios. But during the refinance period, there were often difficulties with respect to customer service levels at banks. They couldn't get back to their customers on a timely basis, and that resulted in business straying away from the bank to other providers who were aggressive in trying to pursue the refinance business.
Well, I know that you're in all size banks all throughout the country. And it's just surprising because part of the chart of what you're showing is when you even look at the penetration in a marketplace of households that forget about their own customers, but even within the penetration of a marketplace, they don't seem to have, and this has been my experience, they don't seem to have really a grasp of really the data. Is that your experience?
Yeah, I would say that's true. They don't have a grasp of the data, the demographics and the characteristics of their own bank customer base, again, in order to enable them to look at their customer base and make the right offer at the right time. I mean, I think, again, the lack of focus on mortgage specifically in advertising in the marketplace limits unaided recognition of a bank as of the local bank, even community banks, as the place to go. Now, credit unions have seemed to master this a little more effectively than banks. Their members are tight with the credit union and tend to have a relationship that can lead them to looking to the credit union for mortgage in throughout all environments, refinance or purchase. Some of the larger credit unions are actually very, very good at driving business into their credit union just from their presence in the market. But for most commercial banks, you need that additional emphasis on mortgage marketing in order to get that recognition level up so that the bank is associated with mortgage in the minds of their own customers. And that can actually happen not only through advertising, but through the interactions with customers in the banking offices. When a customer is in the office for a different purpose, question always arises, and we see this all the time, that there really isn't a lot of profiling going on or interviewing to try to seek out customer needs beyond whatever the specific transaction was that brought them into the bank on a particular day. And again, that lack of having that discussion on their overall financial needs then does not lead to the idea of whether or not it's the right time to get in front of them for a mortgage. The discussion just doesn't occur. So, getting that banking office system and other bank departments, such as business banking and wealth, involved in talking to their customers about the bank's ability to provide for their mortgage needs is a critical part of the marketing effort that needs to happen at banks and often does not happen.
So, is it your view, and certainly I know just from what you're saying in the article, you talk about how banks have typically stayed in silos. And as a result of that, they really like the example that you're using, like home equity lending could be underneath consumer and then mortgages under mortgage. I mean, it does seem to be segmented that way. Do you see that changing, or in essence, they're still kind of holding on to the old ways?
Well, I think it's changing at some
Hmm.
shops, at some banks. I think, but certainly I think unlocking that type of relationship approach, particularly you mentioned home equity,
Hmm.
it's certainly a natural for banks. They're the main providers, have historically been the main providers of home equity lending. And now, making sure that home equity is tightly integrated with overall residential mortgage lending so that the right product can be offered to the customer at the right time. In other words, for many people these days, a home equity loan can do the job, but there may come a point where the person is going to sell the house, and you need that purchase money first, or even a cash out refinance could do a better job, particularly as rates perhaps continue to drop here. But if you're not tightly integrated between residential first mortgage lending and home equity lending from a marketing and a fulfillment standpoint, so that it's not a problem if somebody needs a home equity loan, that can be handled quickly, efficiently, and certainly if a first mortgage group has the ability to do that home equity loan, to do it in such a way that they can have the speed to fulfillment that is now being offered by many fintech type organizations out there, where their calling card is ease of approval, ease of closing. And again, so making sure that those silos are broken down so that the customer is the focus and the customer need, rather than a product silo
Right.
that each generates its own business in its own way. Almost certainly that will lead to generating more overall business for the bank.
Well, I think you're completely right on that. But let's talk about how we can fix all this. And so
Mhm.
obviously it starts with starting with a plan. And I think you
Right.
make a really good point that this isn't something that happens by itself, that this does take leadership and planning. So talk about the planning side, what you've seen work.
Well, I think, first of all, there has to be executive support for a consensus on how to position mortgage and home equity lending inside the bank. What's the goal? I mean, does the bank want to be a competitor, with a full range of mortgage products? There are banks that perhaps, because their focus is strictly on the commercial side of things, they happen to have, retail banking offices, but they're more in support of other business line activities, business banking, and so on. They don't really see themselves as competing with the broad range of products and so on that might be needed to meet all customer needs all the time. So if that's the focus of the bank, then you don't pursue the kind of
Mhm.
strategies that would be required if the bank does believe that mortgage is a key consumer product that can lead to more opportunities for other banking relationships and a tight relationship with the bank for the long run. And if that is the plan, then again, with executive leadership, creating the planning environment that includes mortgage people at the table, that they view themselves as a critical part of the consumer
Mhm.
lending delivery system at the bank. Again, mortgage banking, it's interesting. It's kind of been viewed as a silo, but to me, what mortgage banking really is a set of skills. It's a particular set of skills that are needed to really effectively deliver what can often be a complicated product compared to other
Mhm.
products, even like home equity. And that kind of planning around how to translate that set of skills into the banking environment so that you can get the result that you want in terms of overall market penetration and so on. That's what the plan has to speak to. And again, all the parties, including consumer lending, marketing, credit risk management, and so on, need to be at that planning table so that everybody's singing from the same hymnal in terms of what the goal is for mortgage at the bank. Is it important to retain servicing? Is that part of the mix at a particular bank in order to establish that long-term relationship? How does that play in? So you often have to bring in treasury management and the ALCO committee to make sure that the mortgage servicing rights issue is addressed head on. How about products? Is there an opportunity at the bank for portfolio lending? Sometimes that is robust, sometimes it's more constrained, like it is today, where deposit outflows have limited the amount of mortgage loans that the bank may want in its portfolio. But again, those people from Treasury, from credit risk, and so on have to be at the planning table in order to have that comprehensive look at how mortgage ought to operate. It's not just a production silo like it may have been viewed as in the past.
So let's look in a deeper dive on the issues of what you see as a best practice. And you've already talked about identifying mortgage opportunities. And then I think you've also really kind of delved into organizing your marketing team. But could you talk a little bit about that? Because one of the things that I see with banks is the marketing team tends to be for the whole bank, and then therefore this is something like it's like a sideshow for them, and they don't really focus on what is needed to be effective in mortgage lending. So talk about that issue.
Well, again, as I point out in the article, I mean, in my ideal world, at least, marketing for mortgage would report into the mortgage banking unit so that the needs of marketing are properly conveyed to a marketing person. In other words, the needs of marketing for mortgage, which again are oftentimes more direct marketing to customers,
Mhm.
certainly support for the loan officer, sales force, and so on. That understanding exists in the mortgage unit. However, that mortgage person needs to be plugged in directly to overall bank marketing so that the discussions around the frequency of touches to customers, how that's going to be approached, marketing budget. I mean, in banks, oftentimes it does come down to the marketing budget, and making sure that mortgage is properly included in the planning for the marketing budget is important. But again, that just left to their own devices, a bank marketing
Right.
group without a lot of input from mortgage will tend to focus on portfolio products and institutional marketing. And of course, they also have the deposit side of the house to focus on too. And those things by themselves, we find, do not generate mortgage business. In fact, institutional or brand advertising in our work in our mortgage customer experience program, MCX program, most customers are not selecting their mortgage lender
Right.
because they saw an ad on TV, about the bank. Credit unions maybe do this a little more effectively. As I mentioned, they can tend to use image advertising to drive business in. But for most banks, that kind of advertising is not what people are looking to. The reason that people go with a particular mortgage lender is a relationship with the mortgage loan officer themselves or a relationship with the institution. It's or a referral from a family or friend is in there too, but it's more of a direct referral relationship that has to be supported by marketing, not just institutional advertising. So again, that interaction between mortgage marketing and bank marketing is often missing and is critical.
Well, you're exactly right. And I think this applies to big banks as well as smaller banks, is that they feel their brand is enough. And in the mortgage space, it's not. And I think obviously, yeah, what your group is doing with the customer experience has proven that over and over again. So you talk about leveraging, and this is one of my favorite mysteries of life, about leveraging bank customer data. And so talk about what you see most banks doing and what should be a best practice, because I just don't see it. It's a disconnect.
Well, again, I think oftentimes there's a data unit in the bank, and they may not, again, be focused on the kind of the profiling of customers in their customer base with respect to when they might be in the market for a mortgage. So you need probably most banks need to plug into an external source, a big data shop of some kind, to enable an appropriate analysis of the mortgage customer base and the non-mortgage bank customer base to identify those mortgage opportunities based on status in life, what's
Sure.
happening today. I mean, people are getting very sophisticated about this. Even in the purchase money environment today, I understand that there are organizations that are actually, through geocoding, figuring out when a customer may be maybe touring open houses in order to figure out who they might want to go after from a marketing standpoint. But again, that big data kind of focus on demographics and lifestyle in the bank customer base is often missing, and you probably need an outside resource to get that done effectively, at least in most shops.
Well, you also spend a lot of time on talking about tapping into obviously the branch network and training the employees in the branches for the mortgage product. I do see many banks will have the loan officer covers a certain branch, but that's not really enough. And usually the branch doesn't know what mortgage is really doing. And so what they consider a lead is not really a lead. And it's a lot of going around in circles. Talk about that.
There's a really large training aspect. Again, if the bank does want to mobilize itself to generate more mortgage business, then there's a training element
Sure.
on how the platform bankers, the people who are in customer contact on a daily basis, need to react to a customer exchange. They need to be, in effect, profiling the customer, having that conversation that enables them to discern uh, a serious customer from just somebody who might mention mortgage in the conversation by asking deeper
Yes.
questions about their particular need. And also, I mentioned in the article, we do secret shopping at Stratmor, and that oftentimes uncovers for executive management the fact that customers are not experiencing that kind of an interview process when somebody shows up and mentions mortgage. In fact, in the article I mentioned that we've seen situations where our secret shopper is in the bank. They're the only person in there. They prompt the personal banker for a mortgage opportunity, and they are sent away and asked to make an appointment and come back later to talk about the mortgage, and they're the only person in the shop. So, it's that kind of activity that's happening that management needs to be aware of. And again, it's really a training aspect on the part of platform bankers and customer contact people in the branch. And that has to be reinforced because there's turnover. It has to be reinforced constantly in order to get the kind of interactions that will lead to bona fide mortgage leads.
Well, you're exactly right. And one of the things that I see the banks do align their mortgage staff with the branch, but as I've already mentioned, so the branch is giving leads under the quote, oh yeah, this is a lead, when in essence, maybe it's just an issue that the branch is under a silo of the retail banking side and not really the mortgage side. So they'll just feed them whatever. I've had students in the class that get a lot of leads from the branches, but none of them work out because they're not qualified. It's
Right.
really shocking.
Well,
So
there's a balancing act there. I mean, you can't
sure,
discourage, somebody who might be interested from
yeah,
applying. I mean, that's from a fair lending standpoint, that's important. But again, having that, just trying to sort out, well, what's your home ownership situation right now?
yeah.
Are you looking to move? Or how about your kids? Where are they at in the process? Are they looking to be first-time home buyers? Give me some information on that. I mean, what's the rate on your current loan? I mean, can we save you some money from a refinance opportunity? I mean, I think most potential customers would say, "Well, I'm just thinking about this," and at that point, that's not a lead.
Right.
You don't pass that along. But if
Yeah.
it's more serious than that, then again, with the proper training, you can get the higher probability leads over to the right either brand
Mhm.
retail banking, retail mortgage partner, or oftentimes banks now use a call center, a centralized group that can react quickly, maybe even on the spot while the customer is in the branch, to react to that conversation and see if there's a real
Mhm.
opportunity there. And again, if an opportunity does appear to be there, then that consumer direct or centralized center can often do that loan more efficiently and cost effectively, perhaps, than the retail loan officer would. I know there are turf issues there. The
Sure.
retail loan officers don't want business to go to a centralized group, but nonetheless, it's a big world. I have the big world theory, Pat. There's lots of business for everybody, and
Yeah.
let's not fight turf wars. But again, from the top of the house, you want that customer to be served immediately and in an effective way and a cost-effective way too for the mortgage group to make money, which is these days has been very important.
Right. And so you spent a lot of time talking about the digital side, and I loved your chart about what, in essence, are the different profiles of institutions with the pre-approval processes and all of these technologies that we have today. Can you speak about that?
Well, I think the biggest thing on the digital front is, first of all, is it obvious from the bank's website that they're in the mortgage business, and that there's a call to action quickly, that a customer can quickly uncover if they're interested in a mortgage product by going to the bank's website. Second of all, the most frustrating thing I think for customers is if they get into that process, especially if they've filled out information online, and then when they first interact with the mortgage representative, it's like the customer was brand new and was not a customer of the bank and
Yeah.
just appeared out of nowhere. And that loan officer knows nothing, about the customer, even though they spent time on the website filling in information, or because they're an existing customer of the bank already has a lot of knowledge about their overall relationship, deposit accounts, and so on with the bank. So as the chart showed in the article, the level of pre-fill capability that's out there and being used is a very low percentage, and banks, beginning to focus on that, making it like that prospective customer is a known quantity to the bank, makes them feel at home right away. That can be a powerful tool. Again, digital origination is really just being at the place and time of interacting the customer in the way that they choose. So they, if they got onto the website, they're at least familiar with that and want to and are willing to work on the internet. But then you got to treat them like they're a known customer of the bank, and not like they just came in from out of town someplace. Yeah. So
So, Tom, since you're in so many banks across the country, helping them straighten out the world of the mortgage space, what are some of the trends that you're seeing that you think will kind of go to 2025, and talk about how you see all of these issues actually, what looks like the game plan that they're now getting their act together, or talk about that.
well, I think they're focused on it because, in many cases, the last few years have been so painful,
Mhm.
for the mortgage group inside banks. They've been focused on it because, they don't like what's happened over the last couple of years.
Sure.
So yes, there's a focus, but that's why in the article, certainly, in order to be prepared for the future environment, banks do, it wasn't the purpose of the article, but banks do have to address their revenue profile. Are they pricing loans properly? Are they
Mm.
as intelligent about their execution in the secondary market as they possibly can be? And have they cut all the expenses that are needed? I mean, even though there's been a lot of cutting, there's up until at least maybe now when refinances might pick up, there's still been excess capacity in the business if you just look at the numbers. So I think banks preparing for the future, they have to ultimately get to a point where they believe they can, get a return from being in mortgage production. And for many banks, having a servicing portfolio has helped buffer that lack of production income over the last couple of years. So that balance between production and servicing served those banks well and likely will into the future. The missing piece for many banks is they have not had the purchase money driven capabilities that will be needed. I think certainly in the future, because almost no matter what the Federal Reserve does, I mean, I don't think you can build a business plan based on
Mhm.
the Federal Reserve ultimately getting real accommodative. We're not going to have a repeat, almost certainly, of the 20 and 2021 period. So the focus has to turn to how is the bank competing on the purchase money front, and that gets into both sourcing business from the bank customer base, which was our focus today, but also back to the traditional
Sure.
relationship building with external referral sources that you're doing. And again, there has to be an appetite in the bank to do that, because that's not that's an effort by itself that requires focus. We see that some are doing that. And
Mhm.
some had a pretty good presence in the purchase money market throughout even 2020 and 2021. But again, without that kind of focus, business just flowing in the environment over the next couple of years, that's not gonna happen. There has to be business development for that purchase money business, and banks are, many banks are doing that, some are not. So.
Well, Tom, we only have a few minutes left, and certainly share with everyone how you help banks actually improve in this arena.
Sure, we can. We'd love to get in, and especially for medium-sized type organizations, that's kind of our sweet spot where they have potentially the financial capabilities to attack all these issues, and they just need focus. They perhaps need focus on the marketing side, perhaps building up that consumer direct capability more effectively.
Mhm.
Certainly, I mentioned the secret shopping can be an adjunct. We do capital markets reviews to try to ferret out where there might be additional opportunity in terms of gain on sale and pricing. And then operational reviews if there's still potentially low hanging fruit from cost side, or just you want the customer experience part of things, which is very important. We find that what sets organizations apart is the overall experience that the borrower
Mhm.
has had with the bank, not just the
Mhm.
LO, but the overall positive experience with the organization can make a customer a raving fan. So we take a look at the operational flow, workflow, and technology that the bank may have that can help enhance that customer experience. And then, as I mentioned, from a feedback standpoint, we have our MCX program, which is a customer survey program, but goes deeper, not just the loan officer, but into the process to determine where there might be issues that can create a low. We call it it's a version of the NPS score. It's a performance
Sure.
score on whether or not you're a raving fan or a detractor,
Yes.
from the experience. So that kind of information that can be fed back to the participants in the process, LOs, processors, underwriters, and so on, in terms of behavior change can be very important. So we work with organizations on all those fronts, depending on the need of the bank. And again, that's what we're all about here at Stratmor.
So, Tom, how can they get a hold of you? I mean, this is an excellent article. You can go on to STRATMOR's site to see it. I highly recommend it. I think it is really, really targeted and precise in what it's recommending. So, Tom, how can they get a hold of you?
Well, they can go to the website, stratmorgroup.com, and see that article. They can, reach us at the numbers that are on our website. They can email me at tom.finnegan@stratmorgroup.com. Any of those ways can get you in touch with us.
Well, Tom, I want to thank you for sharing all your wisdom. I've known you for many, many years. You're one of the smartest bankers I've ever met. And so he has a handle. I highly recommend everyone to reach out to him. And he certainly would be willing to share his insights because he's in institutions all across the country. And I want to thank you, Tom, for really spending time with us. And thank everyone for listening. And certainly to connect with us in future podcasts, go to patsherlock.com. Thanks so much, Tom.
I value the opportunity, Pat, and thanks very much for the kind words.
Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.